Hi, my name is Kevin Retcher. I'm the owner of First Meridian Mortgage and KSA Insurance Agency. Today, what I want to talk about is the startup of your escrow account. I want to demystify how to calculate your escrow account. If you're a realtor in the industry or you're a loan officer, a new loan officer, and you don't know how to calculate someone's escrow appropriately, this is going to teach you how to do that. Okay, this is a loan officer 102 class versus a 101 class. Okay, so it's the ultimate guide to escrows, the formula, and the math. Okay, one thing that I want to remind you is the lenders are allowed a 2-month cushion of the tax bill and of the insurance bill within the escrow account. Okay, that is a key point to understand. All right, a 2-month cushion means if taxes are paid every 6 months, plus 2 equals 8. I want you to remember that. Insurance is paid annually on a 12-month basis, so 12 plus 2 equals 14. Those are some key points that we're going to need a little bit later. Okay, let's do a quick talk about escrows. Escrows are like a savings account for your payment of the tax bill and insurance bill. If the monthly taxes are $500, not everyone has $3,000 every June, December just to shell out if they don't plan for it. So what they do is they take 1/12 of those bills. So if the annual taxes is $6,000, 1/12 of that equals $500. Likewise, 1/12 of the insurance is $100. So the standard escrow account would be $500 for taxes and $100 for insurance. So that's $600 a month. Okay. Now, 1/12 of that is put onto the principal and interest on your monthly basis, so that it builds up this account to go ahead and pay these tax bills in June and December, and the insurance in the month of March. So in this equation, we have the insurance is technically paid here. Taxes are paid in June and in December. All right, so those are some key points. Now, some people say, oh, well, I can manage this myself. I want to waive my tax, the escrow. Okay, lenders will typically allow you to do that, but just don't automatically say I want to waive my taxes. I don't want to have them collected. Here's my thought on that. One, a lot of people don't know that some lenders will charge up to 1/4 point to waive those escrows. They make money on that escrow account while they collect that, and vice you doing it, and they worry about whether you're going to forget, make the payments, or things of that nature. So there's added risk there. So they would prefer you to have an escrow account. I personally think most people don't budget appropriately for the escrow, so I feel having an escrow account makes more sense. Some people will say, Kevin, I can make money on my escrow account, so why should I have one? If you run it like an escrow account and put 1/12 in there every month, and then pay the tax bill, 1/12, then pay the tax bill, maximum you're ever really going to have in there is like $3,600. You're not going to make that much money historically on 600, 1,200, as it grows, you're not going to make that much money, and then it drops to almost, zero with a 2-month cushion. Okay, So you're not going to make that much money. So I'm an advocate of having an escrow account. Now, some lenders give the option of having an escrow account away for free. So what you don't want to do is just say, hey, I don't want one. You want to ask, is there a fee if I waive the escrows? And it's usually built into the interest rate that you're being offered. Okay, so if there's any fee whatsoever, a quarter point on, any size loan, it takes a long time to earn that interest if you're running it yourself to recoup a quarter of a point. Okay, so just have an escrow account. All right, so on a refinance, all right, and you pretty much already know the dates of your insurance policy and when the taxes are due. Same on a purchase. If you're closing August 15th, in this scenario, you prepaid interest to the end of the month. So if you close August 15th, remember in the previous class, if this is the 15th and this is August and this is September, old lender gets paid on the payoff of the old loan. New lender gets paid the prepaid interest. So if the payment was $4,000 and the balance was $400, 15 days of the old, payoff would be $402 in this scenario. And prepaid interest, let's just say it was, for whatever reason, is the same amount of money, is $2,000. So this is the new lender interest to get you to September. Okay, so that would be the $2,000. So this is really a half a month's payment. Really not an escrow item, it's a prepaid item. You're prepaying your interest, okay? But it's in, right above where the escrow collection is on your loan estimate, okay? Now, in this equation, how many months is going to be due at closing if I closed August 15th? So you prepay to September, you get to live in the property. Remember, interest in arrears, you get to live in the property. First payment is October. Second payment, November. Third payment is December. Remember the equation, 6 plus 2 equals 8. You're going to make 3 payments. So you would start up the escrow account with 5 months of the tax bill. If it's $500 a month, that would be $2,500. How much insurance is going to be needed to start up the escrow account? The insurance is due in March. Okay. Remember the equation: 12 plus 2 equals 14, and then we need to count how many months we will make, how many payments we'll make in conjunction with before those tax bills are due. So we got 1, 2, 3. We got 4, 5, 6. 6 from 14 is 8. So 8 months times 100 is going to be $800. So at closing, your prepaid interest, taxes, and insurance, that would be added to the closing cost, and your prepaids is your total obligation. But in this particular situation, you would start up the escrow account with approximately $5,300. Now, there's one little difference. The government wants to make sure the lenders don't collect too much money. So they have this computer program that runs an analysis and double checks if you closed here and made all these payments throughout the year, and they paid this bill, and they paid this bill, and they paid this bill, at the lowest point in any given month, where is the lowest balance after paying the bills, and they're allowed a 2-month cushion. So if it was right here, let's just say it was 2 months here, and they calculate that out, they're allowed a $1,200 balance, and let's say they would have had $1,400 instead of $1,200. Okay? So at closing, if that was the case, they would give you $200 off of that and only require you to bring $5,100. So this aggregate adjustment you see is the government protecting you. Hard to say that, right? It makes me choke. But in general, it is the government protecting you, making sure that you don't collect too much monies in your escrow account at closing. Now, one other thing that does happen, and I get a lot of questions on, okay, and this is Loan Officer 101 here, in this next piece. So one of the questions I get on purchases is a little bit different, okay? Your insurance policy is an annual policy, and let's say at closing you paid $1,200, right? But when you look on your closing statement, they're going to ask for 3 months additional in the escrow account. I'm going to run through that real fast, and this is a common question. You close here August 15th, right? You prepay to September, your first payment is October, November, December. So you closed August 15th, so they're going to pay this in August. Your next 12-month policy. So based upon this equation, you're going to make 11 payments before your next August bill is due. 11 from 14 is 3. So on a purchase, you really fundamentally are paying 12 to have a 1-year paid policy and 3 in the escrow, which is effectively 15 months. My last point on a refinance that could change these numbers. So escrow class 103, okay, on the tax bill. This can get a little bit more difficult. I am licensed in Virginia, Maryland, D.C. If in fact your tax bills in Maryland are due not on a 6-month basis, but they're due in September and December. So these are not fundamentally 6 months apart, okay? It doesn't change how the taxes are calculated that you need it on your escrow at closing. But they do get more expensive cash flow wise at closing, but then you'll have a larger escrow account coming back from your current lender. I'm going to run through that real fast, okay? Let's assume that you close here August 15th. If you're refinancing, first payment will be October 1, 2, and 3. So you're going to make 3 payments before December. Here's where it gets crazy. If this tax bill is due within 60 days of closing, they're going to require that to be 6 months to be paid to the county. So that's 6 months that's going to be due, right? Remember the equation, 8 minus the number of payments would be 5. So, because these are not paid 6 months apart, at closing in Maryland, you could have a scenario where the 6 is required to be paid, and you have to start up 5 for this escrow account. Now, when this happens, there's typically, they'll still use the aggregate adjustment and make sure that there's no point in time where there's less than a 2-month cushion. Okay, but there could be an equation where it's actually greater than the 8%, the 8 months collected, but that usually will only happen if, in fact, the tax bills are not due 6 months apart, semi-annually based. Okay, so I've gone through 3 different major scenarios: 101, 102, and 103 on calculating your escrows and the formulas. There's no reason, if you know when the tax bills are due, just make a simple timeline, figure out when your first payment is, subtract it from 8 or subtract it from 14, and you'll be able to calculate out your escrows. It is as simple as that. In my 3 jurisdictions, Maryland, DC, and Virginia, each state has different due dates. So the formula doesn't change. And keep in mind, the government is going to make sure that they don't collect too much money. Again, my name is Kevin Retcher. I'm the owner of First Meridian Mortgage and KSA Insurance Agency. I've been in business for over 27 years. I'm a veteran-owned business. If you have any questions, feel free to call me. I do have a network of over 32 other states of other broker owners like myself in those states. So in theory, I can potentially help you if you're not in my jurisdiction and maybe give you a referral. My phone number is 703-799-5626. Again, I'd like to thank you for your business. To all the Marines out there, I say, Semper Fi. Talk to you soon.